Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 5th of February 2024, and this is our equivalent to yesterday's weekly update. However, it's being published literally just after midnight GMT. There is a strong possibility we could see much lower silver prices this coming week, and that could be balanced against gold prices holding relatively firm, though there's still the possibility of a slight dip. Part of the reason, the strong US economy. We'll take a look at the figures, and if you haven't listened to yesterday's update, then you can do so here. Now, before we look at the figures, a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now, gold rose $21 last week, rising from 2019 to 2040, having hit a high of 2065 and a low of 2018, a rise of 1%. In our last update, we predicted that gold would trade between 1975 and 2075, but would operate broadly in the middle of that range, which it did most comfortably. In sterling terms, gold was up £26 at £1,616, and in euros it closed up €30 at 1,891 euros. Both in sterling and euro terms, gold hitting a peak, an all-time peak, this past week. Silver fell 12 cents, falling from $22.81 to $22.69, having been as high as $23.45 and as low as $22.42, a fall of 0.5%. Last weekend, we forecast silver would move between 22 and 24, and once again it did this quite comfortably within the range. In sterling terms, silver was actually up 2 pence at 18.02, and in euros it closed at 21.10 euros. That's up 0.06 euros. Now, for UK buyers, we've stated time and time again, we would not purchase physical silver, note I say physical silver, unless it dropped to £15. It is, to be fair, unlikely to see such a fall to that level this year, but who knows? But the reason being is that with the 20% VAT levy, which is often difficult to get back should you resell your silver to a dealer, it's just simply not worth it. Fractional gold, even at a premium, is arguably the most logical purchase to make because there is no VAT. But of course, the situation is very different in the United States. Now, as a result of gold going up and silver going down, the gold to silver ratio went up from 88.5 to 1 to 89.9 to 1. Bitcoin currently stands at 43,000. That's up $1,238 on the week. Equities were up again, with some indices again reaching all-time closing highs. The Dow Jones closed up 554 points at 38,654. The S&P 500 closed up 68 points at 4,958. And the Nasdaq Composite closed up 173 points at 15,628. The FTSE, however, was down 20 points at 7,615, but it was up some 174 points the week before. Oils, fortunately, were lower, wiping out the previous week's gains, plus $1 or so. Brent crude was down $6.22 at $77.33, and WTI crude was down $5.73 at $72.28. The dollar index was up 0.49 points at 103.92, just trying to reach that 104 level. Now, last week we saw very strong economic data coming out of the United States, and frankly, an unbelievable jobs report, which, even if you pair out all of the government jobs, which arguably one could argue to some extent are artificial, it's still an incredibly strong report. In addition to that, consumer confidence for January was up 6 points at 114.8. Quarter 4 productivity came in at 3.3%, compared with expectations of 2.5. Manufacturing PMIs were higher for January compared with December and higher than expectations. And on Friday, as mentioned, the jobs report came in with an incredible 353,000 new jobs for January, compared with an incredibly strong figure of 333,000 for December, and against expectations of 185,000. Hourly wage increases were double that expected also at 0.6%. Now, the week was an interesting one for markets in general because we saw on Wednesday the Fed not just agreeing to leave interest rates unchanged, but its chair Jerome Powell suggesting that there will be no interest declines in March, or that they were very unlikely, and some commentators suggesting there will be none in May either. The results were encapsulated quite nicely by commentary from FX Empire, quote, US stocks logged their biggest daily drop of 2024 on Wednesday after Federal Reserve Chair Jerome Powell pushed back on the likelihood of the central bank starting its rate cuts in March. March is probably not the base case for when the Fed might start lowering its benchmark rate, Powell said during the press conference on Wednesday afternoon. Unquote. But despite all of that, equities closed the week higher, certainly the American equities. The jobs report, 353,000 new jobs, against Wall Street's forecasting of 185, propelled the equity market on Friday. Now, this coming week, we have on Monday services PMIs, final PMIs. On Wednesday, the US trade deficit for December, we're expecting $62.1 billion, and consumer credit figures for January anticipated to be at around $15 billion. And on Friday, we have seasonal factor revisions of the CPI figures. So not really a great deal, perhaps the PMIs on Monday, to move markets, particularly from an economic point of view. The following week, though, we have CPI figures and retail sales, so expect some movement then. Now, one would expect, with a strong economy and interest rate reductions likely to be delayed, we would anticipate precious metal prices to have fallen, especially with the US dollar strengthening. The reality is, though, that geopolitics has had perhaps more of an impact. The US launching strikes in Iraq and Syria, aided by the UK, with nearly 40 people reported killed, and the political rhetoric increasing and causing many commentators to believe that this situation and earlier skirmishes are going to worsen the conflict further. This has acted to encourage a flight to safe haven assets such as gold, with silver gaining, but not enough to allow for the economic dampening effect that a positive economic environment in the US is currently having. That said, gold did appear to run out of steam on Friday after peaking to its week's high. Another undoubted positive effect on gold prices has been China's latest rush to gold, sparking a fresh buying frenzy. According to data tracked by GSC Commodity Intelligence, Chinese investors, households and banks have been piling into gold at one of the fastest paces seen since the global financial crisis, as the country's stock market and real estate sector continues to sink deeper into economic meltdown. Silver has not fared so well, with a strengthening US dollar and rising treasury yields having a dampening effect on this precious and industrial metal. Like gold, silver peaked on Friday only to fall back again, but as far as silver's concerned, unfortunately, into negative weekly territory. Analysts believe that silver may have further to fall, and we hold the same view, with geopolitical conflict currently the only catalyst holding it up at present. So what is likely to happen to gold and silver prices? Well, gold is being avidly purchased by China and is propped up by geopolitical concerns. However, strong economic data is having a negative impact. Silver is suffering from the same negative impact, but does not have the benefit of aggressive buying from China right now. That may change in the future, but right now, no. So unless the geopolitical landscape gets significantly out of hand, we expect to see gold trade this coming week between $1,975 and $2,075, with $1,950 to $2,100 as outliers. We expect silver to trade between $21.25 and $23.25, with $21 to $24 as outliers. What do you think? Please do share your thoughts. Meanwhile, we'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign. Thank you for listening. Pop on over to Finances Do Matter and subscribe there if you haven't done so. And as always, we wish you a safe, enjoyable weekend and a prosperous week ahead.